Okay.
All right, so exam technique is very important. When you're looking at past papers, because this is the first past paper that you're looking at after the content, the approach should be to look at the sections that you've been given. So in this past paper from 2019, you've got four separate questions. You've got a CC disclosure question here, out of 42 marks, 50 minutes. You've got a partnership liquidation question, which could be piecemeal or simultaneous. Then you've got closed corporations, which is a cash flow. And then the last question is the branch, okay, which is 8 marks. So you can decide where you want to start. Obviously, it's good to start with topics that you're comfortable with because it also builds confidence, and you should be able to bank some time. If it's an easier question, at least then you'll have time for more difficult questions later on. Okay, so I'm just going to go in order. I'm going to start with question 1, and then I'll do 2, 3, and 4. First question is disclosure. CC, statement of profit and loss, and a statement of financial position. Okay, let's have a look at it. Okay, you've got an extract, you've got adjustments. The required is important because you have to draw up the requirements. Okay, so A, what's the year in? 28 Feb. Okay, there we go. And then just in terms of disclosure, obviously you're going to have sales, cost of sales, gross profit. Okay, I'm just going to group it as other income. Okay, and then other expenses. Okay, because this is a CC, I am going to have financing costs. I'll have profit before interest and tax, just to show the additional disclosure. Interest or financing costs, you can write that down there. Then profit before tax. Okay, they also want, okay, they only want the assets section of the statement of financial position. Okay, so notice, in terms of exam technique, you wouldn't have to draw up all of those sections because they're only asking for assets. Okay, you can actually probably do more, but it might be limited in terms of what the question has given you, and you might not be able to draw up the other sections. I would just stick to what they've asked you to do. If they ask you for assets, then look at non-current and current. And that's pretty much it in terms of disclosure. Okay, so templates are obviously important. Those templates you can actually use the ones that you've been given, or use the old Excel spreadsheets and just delete and update what you require. That's fine. If you're doing it online, then you can maybe use technology to your advantage. So you'll have all these templates ahead of time, and you can just literally complete it. Okay, if it was written, if this was done on an exam venue, okay, and you had to write this down yourself, you obviously would be given folio paper, and then students have to obviously recreate and draw up the disclosure. Okay. All right, so that's what we've got here. Obviously, we need to follow IFRS. Notes to the financial statements are not required. Round off the amounts to the nearest rand. Okay, that's important. And calculations must be shown. Okay, perfect. So now you go to the question. Okay, you get your easy marks, and you look at obviously income and expenses, and assets. Okay, Lorato and Sali started a CC. Okay, Pushanani CC, and you've got the rights covering the cycle tour of Limpopo, and they're obviously selling merchandise at the local market. In order to finance stock, they've admitted a new member. Okay, so a new member. So you've got 3 actually. You've got different parts of the CC here described below, and then you've got the different members. Okay, so obviously members' contribution, all capital. Okay, so LSN, all part of the SOCI. Okay, it could be part of this, but it has to be disclosed as part of the equity section. Don't need it. Loans to members. Asset or liability, do you remember?
Asset.
Very good. Okay, so when you have a loan to a member, obviously the business is giving the loan to a member, so the business will be receiving that back. Okay, so loan to member, you would assume is long term unless told otherwise. Okay, so Soli's loan. Just read the right line. Okay, 1312500. Okay.
These numbers that they give us for this question are actually really hectic.
Why do you say?
Because there's like 6 numbers for like an amount. Yeah.
Yeah, well, it's probably more realistic actually because obviously contributions by different individuals. A loan, I mean, you could possibly take out a loan for $1 million from a CC depending on how much capital the CC actually has available or how much cash the CC has available to give to the members. So it's not completely unrealistic, but I get what you're saying. Obviously, the numbers are big, so typing this into a
Yeah.
calculator would be quite challenging if this was done, let's say, closed book on campus or at an exam venue. Okay, loans from a member.
Liability.
Exactly the opposite. Okay, so you don't have to look at loans from, you only look at loans to. Okay, there we go. We've got land and buildings. This was at cost. Okay. Right, so when I see that, I'm expecting probably some sort of evaluation, not evaluation, revaluation, okay, or some sort of impairment potentially, because they're talking about this at cost. Okay, this is what, 8250000. Okay, all right, and then we've got equipment in brackets 1781250. 1781250. Accumulated depreciation, you can see that's at the beginning, so minus 300,000. Okay, trade receivables I need. This is 492195. 492195. Okay, trade payables is liability. Retained earnings is equity. Bank is an asset. Investment in S at fair value. I would again assume that this is long term. Okay. Inventory, that's opening stock. So when I see that, I'm expecting cost of sales. Why isn't it scrolling down? I think I have, okay, there we go. Okay, so when I see that, I'm expecting cost of sales. Okay, so cut, let's just paste it down a bit. Okay, so opening stock, add purchases less purchases returns, add other costs less closing stock. Okay, so inventory here, 1st of March. Opening stock is 318750. Okay, what else? Allowance for credit losses offset against your creditors. Debtors, okay, minus 375. Sales, okay, we've got sales 13,120,500. Okay, we've got purchases. So there's the giveaway. Okay, I kind of knew that they were going to go this route because I saw opening stock. Okay, that's just exam technique. Just picking up on stuff from the question. Okay, general expenses. $250,305, $250,305. Just double check the amounts that I am reading them correctly. So there aren't any errors. Okay. Okay, 1.35 million. Remuneration. This is special disclosure. Carriage and purchases. Credit losses. Uh, 58125. Okay, settlement discount received. Okay, we've spoken about this in the past. When discounts are received, they're received from your creditors. Okay, so Eunice's probably going to take the settlement discount received and it's going to offset it against your purchases basically. All right, so I'm going to include it here as part of your purchases. Eunice's probably going to take...
I just put a line under and I said discount received and I put a negative.
Well, that
can I do that
here, but it would be a positive against your other income. So other income, you could show it separately, but if you're offsetting against cost of sales, yeah, you could show it separately if you wanted to, but generally you'd offset it against the purchase because it's obviously going to affect your creditors. So settlement discount received, in actual fact, should be part of that. So 4.5 million, okay, less the settlement discount received of 7,875. Okay, your answer should still be the same, so it shouldn't matter. I'm just going to show it like that because they tend to offset it against purchases and then they offset the other discount against the sales.
Okay.
All right, carriage and sales. Okay, SARS income tax. Settlement discount granted. Okay, here I'm going to show it there. Okay, 27,570. Alright, was that it? Yes, okay, then we have to look at additional information points. So, okay, point number 2.1. Provision must still be made for depreciation on equipment, 20% per annum on the diminishing balance method, including the equipment at cost. Account is a machine which was purchased on the 1st of September for that amount and immediately put into use. No other purchase or sales of equipment to occur during the year. Alright, so you do need to look at the timeline. So end, beginning, during the year. Okay, we bought and including the equipment purchase on, okay, for what is it, 281250 cash. Okay, so you bought new there. Remember the balance that we had here, equipment at cost was for what date? 28th of Feb. So the equipment at cost was at the end of the year. So the beginning would have been 1.5 million. So in terms of depreciation, okay, the cumulated depreciation was on the 1st of March. So 300,000 here. Okay, and then you've got that asset that you bought during the year. Okay, so that gives you depreciation here of 281250 times what is the rate? 20%.
20.
Okay, times September,
6 months.
October, November, December, January, February. I count 6 months. Okay, and then obviously this carrying value. So depreciation here would be 1.2 million times 20% for the whole year. All right, so there's your total depreciation. All right, so you would literally 28,125 plus 240. I hope that's correct. Just double check. 28,125, perfect. Okay, did you get the same thing?
What did you get? 268125. I got 269325.
Okay, did your diagram look the same?
Yes.
Was there a problem with the working? How many months did you count?
6.
September, October, November, December, January, February. Okay, 6 is right. 6 over 12, 20%. Yes, that's right. This was 120,000 times 20%. This looks right to me, hey?
Okay, I see my problem.
What happened?
It was with the, because I did it on a calculator. So I think my adding somewhere for the first one didn't come out
Oh,
correct. But I did the exact same thing.
okay. So as long as you've got the right diagram, that's the important part. If you made a little mistake with the calculator in terms of typing the amounts in, that's obviously minor. That you can just be careful of going forward. But as long as this is correct, as long as your interpretation's right, that's the important bit. This is fine, hey?
Yes.
Okay, great. Okay, a debtor owes the business that amount, declared insolvent. Okay, obviously I need to show this here as well. Minus 240,000 before I forget. 28125. All right, there we go. Okay, now we can move on. All right, so bad debts, credit losses, plus 23295, trade receivables, minus 23295. Okay, allowance for credit losses must be adjusted to 23. The allowance was 37. Let's just double check that. Where's the allowance? Here, yeah, the allowance is 37. So, is the allowance going up or down? The allowance is going down. It's adjusted to. So, if I decrease an allowance, I would debit it. So, I would debit the allowance and I would credit the credit losses. So, negative, open brackets, the difference. 37500 less 23445, close brackets equals. Okay, this is probably going to total up already, so equals answer. Okay, what does that give me? Copy paste. That's going to go here. Okay, the allowance is going to decrease by the difference. So actually, I need to show that here. Okay, there we go. All right, so that allowance, this is the allowance. Okay, if I work out this, I should get negative 23, which I do, negative 234545, that's correct. Okay, good. So that adjustment is correct. Okay, so I've updated my credit losses and I've updated my allowance. Perfect. Next. Okay, interest must still be provided for on the loan. Accounts to members. Loans to members is an asset. Okay, I do need to look at this. At a rate of 50% per annum on the opening balances of any existing loans. Interest on these loans should be capitalized. Okay, that's important. So add it to the balance here. No additional loans regarded during the year. All loans are unsecured and immediately callable. Okay, if it's immediately callable, it's short term. Alright, so that needs to move down. Okay, so did I have any changes during the year? No, I didn't. Okay, no additional loans were granted. All the loans were secured, so all I have to do is just take the opening balances. So 15% on the loans to. Okay, I've got the amount here actually. Plus 15% of I can't see the amount. Okay, here's it. 1312500. Close brackets, close brackets. Okay, this is going to be disclosed as interest on loans to members. Loans to members. Okay, there we go. So 15% of this. Okay, and then obviously adding up all of that. Okay, that's it. All right, that's another one complete. Interest, good. It's capitalized, perfect. I've shown it there, I've shown it there, great. Next. Interest is charged at 20% per annum on the opening balance of the loans from. Okay, so because it's a loan from, it's going to go, it's actually going to be part of financing costs, but I'm going to show it separate because interest is obviously interest on loans. Do we have a loan here? Were there any loans here? I can't remember seeing a loan here. No. The only loan was from the member. Right, so no third-party loans. Okay, so actually we can leave it here. Okay, so interest here, asterisk. Okay, members. All right, so what is it? 20% on the opening balance of the loan, payable on the 1st of March. Okay, so that's obviously next month, so it's an accrued expense. Okay, so if it's accrued expense, you wouldn't disclose it. So this would be interest that's payable basically. Okay, but you would have to show it in the income statement. All right, loan from in. Where's loan from in? Loans from member in here. 562,500 times. What is the percentage? 20%. Okay, is that right?
Yes.
Okay, the investment in S consists of 50 ordinary shares acquired on that date. Okay, so ordinary shares, where are you there? Okay, S is a listed company and the investment was acquired for trade purposes. Okay, so if it's trade purposes, it's obviously short term. Okay, on the 28th of Feb, the fair value of the investment amounted to 1.8 million. So it went up. Okay, so add 300,000, okay, to give you 1.8 million. And then you've got to show the fair value adjustment in the income statement. Okay, an additional 300,000. Okay, that's complete. All right, closing stock given to us 189375. Don't forget to show that on the face of the actual statement, because it's a disclosure line item. Okay, closing stock, closing stock. Perfect. Okay, next. The normal income tax in respect of the financial year amounted to that and must still be recorded. Okay, so what was the actual tax? The tax was that. Okay, so there is going to be an accrual. This will obviously be a liability. You'll have a SARS liability because the normal tax was more. Okay, so obviously to add the difference, okay, you're going to have to add 659505, which would have been a SARS liability, okay, or accrued expense basically. Right, and that's the end of the question. Perfect. So to get your disclosure marks, you have to obviously tally up. Okay, opening stock, no returns. Okay, so we've got everything out. That's all right. Okay, opening stock plus purchases. Oops. Okay, go back. Less 0 returns plus carriage minus the closing gives you that figure. Okay, that figure is obviously going to be a negative, so in brackets. Okay, subtract gross profit. Okay, other income is this plus that. Okay, other expenses. Ooh, I've put these in the wrong column. It's fine. We'll move them up. Ooh. Depreciation. Okay. All right, profit before tax and interest, this plus that minus the expenses gives you that figure. Okay, this minus that. Okay, this minus that. There's your profit for the year. Okay. All right, that was it. Obviously, you just have to... Did you get the same profit, different profits?
I got the exact same thing. The only problem
Very
that I
good.
had was the depreciation, which I had to
Okay,
change now.
brilliant. Well done. So
Yeah,
everything
yeah.
else is fine. So you got... we'll go and we'll look at the mark allocation just now, and then I'll give you an estimate of what you had got for this exam. This needs to go across. That's very good. So see, your basics are very good. Okay, so... Okay, there's going to be a column here. I need to work this out. Okay. Right, same answer there.
You got 134073. I got 113.
Ooh, what didn't you do right?
Right.
Land and building, same
Nine
figure.
was yes, land. Okay, so non-current, I got the exact same thing.
Equipment, same figure.
Current, yes.
Okay. Trade receivable, same figure.
Trade receivables, I got 107955.
Ooh, no. Okay, that's wrong. All right, the mistake is here.
So the mistake that okay, the thing that I did was, do you remember when they changed it? I just added 14055.
Which points?
I can't remember which one it was, but they changed it from 37,000 to
Oh, you mean the allowance?
yes.
Okay, so the allowance must be adjusted to what was the allowance? It was
So the
37,500.
allowance?
So you have to
Yes.
adjust the allowance. The allowance needs to come down. You're subtracting the difference. That's the rest.
So how okay, so then the difference was 14055. And in my workings, what I wrote down was debit allowance and credit loss.
That's correct. So you're debiting the allowance and you're crediting
So
the
I
credit loss. So
added
the
it.
credit loss is here. The credit loss.
Okay.
There's the adjustment.
Okay. So I did minus it there,
That's good.
but I added it
No, you can't add it.
here
Why are you adding it? You're
to
adjusting the
bring that.
allowance. So it's a separate working. There's a bracket here. Can you see the brackets? You have to show this as a separate working.
Can you do it for me in a T account, please?
Okay, so
Like trade
if you
receivables,
had
trade account.
if you had allowances for credit losses, okay, the balance was 37500. It should be 23445. Okay, so okay, credit losses will be decreasing by an amount. Okay, then obviously in terms of disclosure, okay, the balance was okay, this minus the 23445. Okay, if I just show it as that. Okay. Right, then you have to write off the bad debt. So obviously the 23295 was for point number 2.2. Okay, so you had point 2.2 here and point 2.3 there, and obviously your trade receivables is the net amount. Is that okay?
So can I just put the final amount?
Final amount as
Two,
in the 23445, yes,
three.
because that is the
Yeah.
allowance. But you have to adjust because remember it's going to affect this.
Yeah. But I got that part right. I
Then that's
just
fine.
got this part wrong. So
Okay,
you
yeah,
got
just be
four,
careful how you
four.
do it. As long as you've got the right disclosure, that is the disclosure. Whether you're adjusting the allowance and then getting it, or whether you're just showing the allowance and then getting it, it's fine. As long as you've got 445. So was that the error there?
Do you know what the actual error was? So it was 37500, and then I added.
Oh, okay. All right.
One
So you're
four
probably adding instead
zero.
of subtracting. So silly mistake. Yeah.
It actually still works out if you add it. I just
Okay.
added one
Well,
more
did
zero.
you have 445 here?
I added 1 0 mistake to the 37500.
Oh, okay. So you added a zero somewhere.
Yeah, but if you
Okay.
do add it, it still works out. If you,
Yeah. I mean,
because you
there could be
minus
other ways of working it
7
out. As long as you get the right allowance figure,
answer.
it's fine.
Okay.
Okay. The rest was fine. This was fine. This was
Okay.
fine. That was fine.
Where's your bank?
Bank. Where's bank? Was bank a debit?
I have bank
Where's
as a
bank? Oh,
debit.
bank is debited. Why didn't I show it here? I might have. I think I read it and then I didn't put it in. Yeah, that's odd. Okay, or I might have overlooked it. So let's just double check here. Members' contribution, loans to yes, land and buildings, equipment, trade receivables yes, trade payables yes. Okay, I think bank I overlooked. Okay, yeah, bank definitely has to go there. Okay, I left that one out. 80625. Great. So there is another one. Bank is a debit, so it is an asset. So that needs to go up. All right. Yeah, I agree with that. The investment I've got, yes. The inventory I've got. The allowance I've got. Sales, purchases, general, all of that I've got. The rest is fine. Okay, yeah, that's perfect. Okay, great. Good job. Same as this answer.
Just 1 second equals
Did you also have loan
one
here,
three. Yeah, one
inventory,
three
all of that
four
stuff?
eight. Yes,
Yeah, okay, good. That's as long as you've got the
I
same
just have
figure, that's perfect.
trade receivables. Okay.
Okay, good. All right, so yeah, that was what? 42 marks. Okay, it took us around 39 minutes if I'm just looking at the recording here. Okay, so you can see your banking time in the exam. Okay,
Yes.
you've got an extra, what, 15 minutes now? How many minutes did they give you for this? Yeah, 50. So you've got an extra 10 minutes for another question. I mean, and we even went through it quite slowly as well.
Yes.
Okay, so you can see that disclosure questions are quite nice to do. Even with a long question like this, it's still pretty simple. Do you agree?
Yes.
Okay,
Yes.
good. All right, happy with that question.
Yes.
Okay, let's save this.